All right, guys, welcome to our weekly webinar. This is Sunday, June 10th. We are kicking it off for the week. I want to jump right into things today, guys, and I'm not going to waste any time. I'm just going to be just talking a couple things on the economic calendar, and then we're going to get right into a couple pairs. So without further ado, guys, let's get started. But before we do, if this is your guys' first time here, I want to welcome you guys here. My name is David Schinkel. I'm the CEO and founder of Positive Traders. Thank you guys for joining me today. And if you're watching the replay, thank you for joining me as well. Just a little disclaimer, as always, if you guys are watching this, please be using this information for informational and educational purposes only. Please do not be using anything that you guys hear or see on this webinar as financial advice. I am going to be sharing you guys with a couple setups, which are going to be my personal setups, my bias, my opinions on the market. So it's just my commentary that I'm sharing with you guys for educational purpose. And if it helps you in any way, that is awesome. So let's go ahead and jump right into things. Just very quickly, looking at the economic calendar, just a couple key things I want to go over. We have two interest rate decisions this week, so two very important things to cover. So I'm not going to sit here and talk about and go over every single high impact, which is the red folders, every single red folder on here. But a couple things I do just want to point out, which is what we call our key risk events. The most important things that are happening this week is by far number one. On Wednesday, we have our federal funds rate. So we have that's the Federal Reserve. So everything that you see right here is just a fancy verbiage for the Federal Reserve is getting together, and they're going to decide based on economic factors if it is time to raise interest rates, lower interest rates, or keep interest rates the same. And based on if you guys have been following the Federal Reserve or the FOMC statements or their projections, they did decide that they did project that they are going to raise interest rates 4 times this year instead of 3 times this year. And so we are seeing the second interest rate decision happening for the year, or the second time that they are going to be raising it this year. And that's going to be happening this Wednesday. So expect the interest rates to rise from 0.75 to 2%. So I just want to actually point out one thing too is, let me just go down here and you'll actually see all the interest rates. So if you guys look at the bottom left of the screen, says central bank rates. This is just a little cheat sheet on Forex Factory's website. It shows you the current interest rate for each bank. And this is the overnight lending rate. That's what the interest rate is. And you'll see that only the US dollar has the less than sign. And currently it is saying, so what this means is less than 1.75%. So just so if you want to write this in your trading journal, if you guys are new, you want to know, or if you don't care, you don't have to write this down. I'm going to say it anyways, but this means less than, or it's between 1.5%. So between 1.5 and 1.75%. And they are going to be raising it up 0.25%. Okay. So now it is going to be between 0.75% and 2%. Okay. So that's why you see the negative 2% on there. So that is very big news. Along with that, at the exact same time, there is a statement that is released, which you can go to the Federal Reserve's website by clicking on the latest release hyperlink right here, and then also the economic projection. So lots of good stuff that is released, lots of volatility. Expect big moves in the markets, like huge, like 100 pip moves on Euro USD, that type of thing probably happening. And then 30 minutes after that, there's a press conference. So it's not just like one thing when it's just done and over, and 30 minutes following that, there's a press conference. So there's a big thing. I'm not going to talk anymore about it. Just make sure you guys know about that. And then Friday, we have Thursday moving into Friday, we have the Bank of Japan. They have an interest rate decision as well. So it looks like they're going to be keeping interest rates the same. So that is not going to be nearly as volatile as Wednesday, Wednesday with the federal funds rate. So that's a big thing this week. So looking at the economic or the technical analysis for the week to get into the good stuff, I'm just going to be going over and sharing with you guys the pairs that I'm interested in trading with this week. However, I am going to share my bias on the dollar. So just to kind of recap on the dollar index, if you guys did watch last week's weekly outlook when we were up in this area, I had mentioned my outlook overall is still bullish on the dollar. However, the most probable scenario was some sort of correction or consolidation, and we did see that correction last week. I'm actually going to change my marker, guys. We did see that correction last week, finding support once again at the 93.2 level, which has been a very significant level for us in the past. If you have not been keeping up with the weekly webinars, I highly encourage you to do so. So if you have been, you know about the 93.2 level, and you know this zone, this general zone for the dollar index is a multi-year level of, just a multi-year level for us. So we're back above this area, and I am in wait and see mode. I'd like to see what happens. If you guys also are not familiar, just to recap, we talked about this on the daily webinars in Slack if you guys are in the premium group, but for those of you guys that are in the Telegram, we did not go over this last week, is the G7 meetings. So that was this weekend. I'm not going to get crazy into detail about the G7 meetings, but it was held in Canada. It was all of the most prominent leaders in the world in relating to finance, and Donald Trump was there, and the prime minister of lots of prime ministers were there. Just lots of head figures from all over the world were there, and they talked about basically how they can make the world better. Everything from moral issues to political issues to education to finance. A big thing is finance, of course. That's why we're talking about it right now. Is because they talk about Forex and finance, how they can better trade and just make it better for everybody. Okay, think of it. I guess a good way, if you don't know anything about G7, the good comparison is maybe like the United Nations, right? United Nations, they get together, they figure out it's all about world relations and that type of thing. So that's a good way to relate it. But that happens. Or that happened this weekend. It happened on Friday. Last day was Saturday. And so I just kind of want to see how the markets react to the G7 meetings. Then we, of course, have the federal funds rate this week. So a lot of volatile and very important things happening back to back in a very small amount of time. So we're going to be watching closely. But overall, I'd still like to see dollar strength. I still am expecting the 93.2 level to hold as support. This week we may consolidate around this area, but ultimately my targets are upside on dollar index. Gold, we'll look at gold very quickly. So gold has just been consolidating for a couple weeks. A lot of people have had their eyes on gold. We have gotten in a couple opportunities in the group to get in on gold. For those of you guys that were in the group, we got a short on gold back in here, dropped a little bit, and then of course we set it to break even. That became a risk-free trade. We got in again. Actually, we had gotten in before that. We had gotten in around this area and had moved down, broke at risk-free again. So a lot of risk-free trades, which are good, which isn't bad. Those are risk-free trades, no risk involved. So I'm still biased to the downside, but we definitely see a heavy consolidation just under, sub 1300. So watch gold, but I'm still overall biased to the downside, just like I'm overall biased to the upside on the dollar. And if we do see upside on the dollar, then we should see downside on gold. Euro USD, not interested in trading. USD Swiss franc, not interested in trading. Pound dollar, not interested in trading. However, pound dollar, I will mention, I would like to see downside. I've been looking for opportunities to get short on pound dollar again. Ever since we bounced off of this trend line in this area, I mentioned I'm still biased to the downside, but a correction is definitely possible. So what I might watch on pound dollar, this is the 4-hour chart on pound dollar. And just to add a little bit of credibility for maybe some of you guys that are hopping on for the first time, I'm not going to get super crazy into it, but I just want to maybe point out this if it wants to let me. No? All right. I don't know why it's not letting me click on this, guys. I had a trade idea. Just wanted to show you guys my previous analysis on this pair. I don't know why it's not loading. Trading view is always buggy sometimes. Okay. Anyways, just wanted to show you guys that I had this blue line here long before any of this ever happened. So I had this blue line here when this upper trend, right where you actually see this red upside down triangle right here is where I called this downside. So we ended up seeing that downside, just show you guys the accuracy. And then, so what I would do right now is I would be watching kind of this level. Okay. I'd be watching the support. Okay. And watch for, honestly, like on a bigger scale, right? Kind of something similar to what we had happen here, or even right here, right? We had that consolidation, a little bit of correction, and then boom, and then it broke down. So look for a break of this support trend line. Pound yen, I am biased to the downside. Both yen pairs that I trade, pound yen and dollar yen, I am interested in. For what this is worth, on Friday inside a Telegram, or actually going into Friday, on Thursday's daily candle close, so 24 hours before the markets closed, I had typed up a post in Telegram saying that I was expecting more downside on pound yen and dollar yen. Woke up Friday morning with major downside on both those pairs. Went inside a Telegram to post and see who had made money in there. And I was sitting on the draft. I had forgotten to send it. It hadn't sent. So fortunately, I didn't get to send that out in Telegram. I sent that out in Slack, though. So those of you guys that are in Slack, the premium group, you guys got those nuggets dropped, and we got some scalps in on this pair last week. But pound yen, I am definitely expecting more downside this week. Just a very clean downtrend. If you have not been keeping up with my Sunday weekly outlooks, breaking down pound yen, I would highly recommend doing so. I'm not going to do that today, but I explain in detail on my past webinars, why the 148 level is so important, why I'm bearish on this pair, that type of thing. So still bearish on this pair. Dollar yen, I am overall bearish. I want to point out something that I'm sure most of you guys see. Well, besides this trend line that is broken, we have a head and shoulders that is in the process of forming. And so if we see price come down and we see this right shoulder break down, then I'm going to increase my bias to the bearishness, right? I'm going to be increasing my bearish bias. But I'm still bearish as of right now. I'm still looking for opportunities to sell this pair. Both pound yen, dollar yen, I think are going to be money makers this week. Okay. And AUD USD and NZD USD, not really interested in trading either of these pairs. Something to just watch right now is just kind of this ascending pattern that we have on AUD USD and the strong rejection we got at this trend line. So just to kind of recap, that trend line has been here for quite a while. So I think that's the best way I can show it to you guys. Support, 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 and then magically, right? I say magically very, blandly, because it's not magic at all. It's, there's a method to the madness. We had a rejection on the resistance, right? The underside of this trend line. So this trend line is proven to be very strong, and we saw Thursday and Friday bearish for this pair. So I would like to see downside on this pair as well, because I'm expecting upside on the dollar, which creates downside on Euro USD and downside on gold. And we usually see gold and Euro USD tend to have a positive correlation to AUD USD. We should see this pair follow through as well. So just note kind of this sideways consolidation that we've been in. We're obviously in a downtrend. So I think some downside is definitely a very probable scenario. And NZD USD, not as interested in downside as this pair, and not as interested in downside on this pair. And the main reason is because, well, like I just showed on AUD USD, how we're underneath that support trend line that we bounced off the underside of last week. NZD USD, we are still above a major support area, right? We're actually like in between a range, right? This is where we are right now. You are here. And here is the major top that we've had for almost 2 years now. Actually, yes, 2 years now. And here is the bottom that we've had of our range. Okay. So really NZD, USD, you can look for intraday trades and scalps, of course, right? We're looking at the daily time frame. I think that opportunities on the lower time frames if you're to both directions, but if you're looking at like longer term time frame on NZD USD, it's kind of in a gray area right now. It's in between a range, but overall, obviously, right, we had a big drop on NZD USD, which was predicted. And right now we are finding some resistance around the 50 daily moving average. So some argument for more downside can be made. I haven't even looked at the fibs on this pair yet, but it looks like to be somewhere around the 38.2% retracement level. That's scary when you've been doing this for so long. You can literally like kind of see that sort of stuff, but that's pretty interesting. You can see almost to a T, right? Now, this doesn't mean I don't think that this level could be broken. I think it's very possible that we could see maybe like it go up to the 50% retracement level before coming back down, or we could see it find some resistance in this area and move down. But overall downside to start off the week on both this pair and AUD USD is what I would be looking for. And then finally, USD CAD. And I'm also actually going to talk on crypto at the end of this, so stay tuned for that, guys. Give my thoughts on that. But USD CAD, I've talked about this pair for a while. This is a long-term trade. If you guys have not been following my weekly outlooks, you are definitely missing out because there have been opportunities to get, to scalp this pair based on my bias. But 134, just remember that 134. Now, and I'm just gonna leave it at that. Watch last week's live webinar. Watch last week's weekly outlook. That's on YouTube. Just search Positive Traders if you want to see my breakdown on USD CAD. I've been going over this for a little bit now. Of course, we definitely need to break through this area, which is the 61.8% retracement level, which is the peak of our third wave, which we almost tested the week before last. But I'm very bullish biased long-term on USD CAD, right? Like anything, let me just be clear, guys. Like, and this is why I say, and I'm just going to leave it at this. This is why I say that don't take a trade based off of these webinars, right? Because you hear me saying right now that I'm bullish on this pair. And what I don't want you to do is I don't want you to be throwing up USD CAD and just throwing a buy on it. Because just because I'm bullish on this pair, right? 134 is my long-term target. It's very possible price could come all the way back down here. That's a 260 pip drop. Price could come all the way back down here before moving up higher. Even if this price came all the way down here, right, I would still have a bullish bias because we're still overall making that series of higher lows and higher highs, right? So you have to be using your own analysis, guys. You really have to understand the market. Like, being able to, analyze the market is one thing. Being able to have good entries is another thing. So, unless you're specifically in my signal group, taking the signals that I'm giving out with the specific entries and take profits, please be using your own analysis. Don't be taking trades blindly off of what you hear me say on here. So that is that. Last thing I just want to go over is just kind of I just saw a lot of people posting stuff about Bitcoin, how it's dropping. So just kind of a key level to watch if you guys trade Bitcoin. I do not personally day trade Bitcoin. You can see I have two, significant areas marked up on Bitcoin, and this is it, right? I don't day trade Bitcoin, right? I have my hardware wallet. I literally have an offline hardware wallet. All my coins are put onto my hardware wallet. I have that in a safety deposit box, and I don't touch it, right? I just look at the markets once in a while, glance at it. I obviously have it on TradingView, so I see it, but it's not something I actively day trade, nor recommend day trading because of the volatility, and unless you have a lot of capital. But anyways, that's another story. Just want to give my quick commentary on Bitcoin. It's just, all I'm going to say is this, it's at a very simple, significant level of support, right? An area where we bounced off of, which is basically the 6,500 level. Okay, we bounce off of this level multiple times. If we break this level, it's going to continue falling. It's going to fall hard. Very similar to what happened in this area and this area, in my opinion, at least, right? We had a couple of times where price bounced off, and then eventually it cracked and broke through it. And this is, if you're in the Positive Traders premium group, right, I've shared with you guys my thoughts on crypto, that I think it's very possible, and it's probably the highest probability that the whole crypto market is going to continue to correct, right? I don't think it's crazy to say within a couple weeks of this webinar right here, we could see Bitcoin back at $3,000, $4,000. We could see Ethereum back at $300, 300, or around $300. We could see Ripple back down to 30 cents. Now, what I recommend when that happens, if that does happen, buy more. That's what I always recommend doing, right? Just gonna be buying more and buying more and buying more. Okay. So that's that. just something, if you guys did not know, Bitcoin dropped very, very hard over the weekend. So that is just something I wanted to go over. So that's that, guys. That's my commentary for the week. So just a couple of things to go over. And hope you guys have a great trading week. Please remember to use proper risk management. Remember to be using that risk calculator on every single trade. If you don't know what the risk calculator is, you can go to our website, positivetraders.us. You can make a free account on there. Inside of there, once you log into your free account, is going to be a whole bunch of different resources in there, but there's a helpful link section in there, which will bring you to a bunch of different calculators in there, and you've got a risk calculator in there. So in the chat, Charlie, nice meeting you as well. Good to meet you guys. If you guys want to reach out, if you have any questions or comments, please feel free to reach out to me anyway. Facebook, Instagram, Telegram, doesn't matter. I will find a time to reply to you. And other than that, I'll see premium members tomorrow on our daily webinar, free members next week on Sunday for our weekly outlook. And other than that, guys, take care. Have a great trading week and see you guys later.